Hello everyone and welcome back to Fun with Fitzy. Today's Chapter 6 Video 3, one of my favorite topics. We're going to be talking about merchandising income statements under the periodic system. Okay, that was a lie. It's not one of my favorite topics. Anyways, as you know, this is review from grade 11. On a merchandise income statement for a company using the periodic system, you need to have an entire cost of goods sold section. If you recall from last Chapter 5, the cost of goods sold was one line, and it was an account on its own that we journalized and updated every transaction. But here, if you remember, our cost of goods sold formula equals beginning inventory plus net purchases plus freight in less ending inventory equals cost of goods sold. So here we have our beginning inventory, and then our net purchases is purchases less purchase returns and allowances, and it's also a purchase or discounts earned would be in there if we had them. And we're going to get our net purchases right here. So we're going to take our beginning inventory plus our net purchases plus our freight, which is right here, and then if you put those together, it's going to give us our cost of goods purchased, and cost of goods purchased plus our beginning inventory is actually a cost of goods available for sale. So there's some subtotals in here that you don't actually see in this formula that I've written out for you at the top here, but we've talked about this in grade 11. Now, but basically, so our beginning inventory plus our net purchases plus our freight in minus our ending inventory right here gives us our cost of goods sold, which is what we're doing. So on an income statement, you will need to be able to do this. And remember, this is not a debit or credit column. When you do subtotals, you move things to the left. Single ruled lines indicate you're doing some math above, and double ruled lines indicate there's a total. So as a review for merchandising companies, you need to calculate gross profit, which is right here. And gross profit is net sales minus cost of goods sold. So we have our net sales minus our cost of goods sold equals our gross profit right there. And then gross profit minus all of our operating expenses equals our net income. Okay, so here's our gross profit, otherwise known as GP. Subtract all of our expenses, and we're going to get a net income for this company of $30,000. This is a multi-step income statement under the periodic system, and it requires more detail on the cost of goods sold section as shown above. So by now you should be able to prepare an income statement for a merchandise company with a full cost of goods sold section. This is review from grade 11, so I'm expecting that this is not going to be a problem for you. Thanks for watching. I hope this helps.